Many people say, well, Bitcoin's not backed by anything. What's it backed for? It has no intrinsic value. And this, they grossly misunderstand the network. Bitcoin is secured by four types of power: computing power, electrical power, economic power, and political power. The computing power is 460 exahash. That's all of these millions of Bitcoin miners, custom silicon, and they are channeling 16.5 gigawatts of electrical power into 460 exahash. If you wanted to redirect all the computers at Google and Amazon and Microsoft and all of the iPhones to do hashing of Bitcoin, they're probably not going to generate 460 exahash.
Michael Saylor, the founder and executive chairman of software and business intelligence firm MicroStrategy.
On November 30th, Michael Saylor, founder and executive chairman of MicroStrategy, reaffirmed his status as one of the most prominent Bitcoin advocates with another substantial Bitcoin purchase. According to Saylor's Twitter announcement, MicroStrategy acquired an additional 166,130 Bitcoins for approximately $593.3 million at an average price of $3,671.85 per Bitcoin, bringing the company's total Bitcoin holdings to 174,500 Bitcoins acquired for approximately $5.28 billion. This latest purchase solidifies MicroStrategy's position as the publicly traded company with the largest Bitcoin holdings, marking a significant journey from its initial $250 million Bitcoin investment just 3 years ago. Saylor's unwavering commitment to Bitcoin is further emphasized by his personal holdings of about 17,000 Bitcoins. This successful billionaire and MIT graduate consistently shares his investment strategies and perspectives on Bitcoin with the public. In a recent virtual address to a Bitcoin conference in Argentina, Saylor made a compelling case for Bitcoin as a hedge against economic uncertainties and currency devaluation by central banks. He highlighted the global issue of currency devaluation, even in countries like Argentina, where annual inflation estimates reached a staggering 185%. Saylor contends that Bitcoin stands out as the optimal asset for wealth preservation and growth amidst the challenges posed by inflation and monetary debasement. In his insightful presentation, Saylor explains why Bitcoin, unlike traditional currencies like the dollar, has the potential to not only maintain wealth but also facilitate significant growth over time. The clips from Saylor's presentation underscore his belief in Bitcoin as a unique and resilient asset in the face of global economic uncertainties.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So we could start with an observation in this entire last 100 years. The world reserve currency, the US dollar, is collapsing versus assets such as the S&P index. The S&P is 500 of the most valuable companies in the United States, or maybe the world. It's collapsing against real estate, against gold, against art. And it's hard to see this over the course of a year or 2 or 3 years. But if you look over the course of a century, I find it to be very clarifying. And on average, what you find is the United States dollar is losing 7% of its value each year for the last 100 years. Now, if you look at government statistics in the United States, they will tell you that the inflation rate's about 2%, and they'll show you a graph like this, which shows that the dollar has lost, something like 94% or 95% of its purchasing power over this 100 years. But that's based upon the consumer inflation rate. Consumer inflation is the lowest inflation rate. It's a market basket of goods that are easy to manufacture with a machine, or they're easy to print, or they're they're not labor intensive, they're information intensive, like watching YouTube videos or boxed starch or things manufactured. This is the lowest inflation rate. In fact, the producer price index is a higher inflation rate, and the asset inflation rate is higher. So it's a mistake to think that $26 in 1910 or 1920 is worth $1 in 2020. In fact, if you look at the US dollar versus other assets, you can see it's losing value at a much more rapid rate. So the consumer goods rate is 93%, minus 93%. That's this chart. The US dollar versus gold has lost 99% of its value. We went from $20 an ounce to $2,000 an ounce, and so 99%. And the US dollar against the S&P index, which is the US dollar against a corporation, a successful competitive company, or the US dollar against Miami Beach real estate, has lost 99.8% of its value over those 100 years. Now, that's not really well understood. Most people don't think the inflation rate is 7%. They think it's 2%. And the difference between 2 and 7 is 93 versus 99.8 or 99.9. Now, let's focus in on why the dollar loses value against real estate so rapidly. I'll show you a picture of Miami Beach. You see, what you notice is there's a fixed amount of beach, and all those buildings on the beach are there because the value of an acre of land on that beach is 20, 30, 40 million dollars. Very expensive. In fact, the value of an acre in Miami Beach about 90 years ago or 100 years ago was $10,000 an acre. And a few years ago, it was $10 million an acre. Today, it's $20 million, 1,000 to 2,000. Now, why is it that the price goes up so fast? It goes up much faster than the cost of a Big Mac or the cost of cereal or the cost of a YouTube video. And the reason why is because only God can make more beachfront. Politicians can't print more beach. You can't manufacture more beach with a factory. And AI can't create more beach on a silicon chip. There is no way to trick the world into there being more beachfront property. You can see it's a certain amount. It was that amount in 1930. It's that amount 100 years later. And so as the money supply expands, that price goes up proportionally. So that's a fair yardstick. And what you would say is the beachfront property is scarce, desirable property.
The United States dollar, once the world's reserve currency, has experienced a staggering 99.8% loss in value against assets like prime real estate over the past century. This devaluation is even more pronounced in comparison to other international currencies. While the US dollar faces an annual depreciation of about 7%, stronger global currencies are losing around 14% annually. Weaker currencies, such as the peso and the bolivar, are collapsing at an even more rapid pace. Over the last 2 decades, the Indian rupee has declined by 47% against the dollar, the Pakistani rupee by 81%, the Turkish lira by 90.6%, and the peso by a staggering 99.8%. During a presentation, Michael Saylor highlights that the dollar is rapidly losing ground against both the S&P and prime real estate properties. This erosion in value implies that, measured against these assets, other currencies are practically rendered worthless. Saylor emphasizes that only a select few asset classes outperform the dollar's true inflation rate, which surpasses the official 2% narrative. Looking at the chart, commodities notably underperform, and even a fake consumer price index rate falls short. While assets like homes, bonds, the S&P, and popular 60-40 portfolios outperform the CPI rate, they still lag behind the actual inflation rate. In this context, Bitcoin emerges as one of the rare assets that not only beats inflation but outperforms other conventional investment options.
If you want to preserve your wealth, an investor has to convert their currency into assets. And, currency, CNY, euros, dollars, ARS, bolivars, real, etc. You have to convert them into assets that are scarce, desirable, portable, durable, and maintainable. Those are the 5 criteria that matter. And you have to evaluate every asset against that. So what is Bitcoin? Bitcoin is the most powerful digital monetary network in the world. But it is simultaneously 4 things. Bitcoin is an asset, it is a network, it is a protocol, and it is an ideology. And many people misunderstand it. They think, oh, it's just a cryptocurrency. But I think when you start thinking about asset, network, protocol, and ideology, your eyes open. Many people say, well, Bitcoin's not backed by anything. What's it backed for? It has no intrinsic value. And they grossly misunderstand the network. Bitcoin is secured by 4 types of power: computing power, electrical power, economic power, and political power. And if you don't understand these 4 types of power, then someone's going to trick you out of your Bitcoin, or you're going to make mistakes. So, for example, the computing power is 460 exahash. That's all of these millions of Bitcoin miners, custom silicon, and they are channeling 16.5 gigawatts of electrical power into 460 exahash. Now, 16.5 gigawatts is 20 basis points of the power in the world, so it's a small fraction. But 460 exahash is what makes Bitcoin truly secure, because that's all the computer power in the world. If you wanted to redirect all the computers at Google and Amazon and Microsoft and all of the iPhones to do hashing of Bitcoin, they're probably not going to generate 460 exahash. So it's the custom silicon which converts electrical power into computer power, and they're both important. Arguably, it's a lot easier to come up with 16 gigawatts than 460 exahash, because all the hash power is owned by the Bitcoin companies that are securing the network. Now, to put this in perspective, 16.5 gigawatts is more power than the energy used to propel the entire United States Navy. All of the aircraft carriers, all the destroyers, all the ballistic subs, the entire Navy runs on a bit less than 16.5 gigawatts. So that's a lot of power. 460 exahash is all the computer power anybody else can muster. But that's not the only thing. Bitcoin's secured by economic power. And if you look at the 4-year simple moving average of Bitcoin, and then you look at the supply, you conclude about $560 billion have been invested in, the M is wrong, it's $560 billion have been invested in this network. And so that money secures the network. And you got to expect that the people that invested the 560 billion are going to protect it using all of their resources and influence. And then finally, you've got about 220 million holders. 220 million people have some ownership of Bitcoin. And those 220 million people, they're also going to use their political influence to protect the network.
Bitcoin effortlessly meets all of Saylor's criteria. Its scarcity is evident, boasting a lifetime supply capped at 21 million coins, with 93.14% already in circulation. The remaining 6.86% will be mined over the next 117 years until mining halts entirely in 2140. Beyond scarcity, Bitcoin is lauded for its desirability, durability, and portability qualities that shine when compared to traditional assets like gold or real estate. Saylor's unwavering conviction in Bitcoin is further emphasized by his firm's recent $593 million Bitcoin acquisition. What are your thoughts on Saylor's presentation and his strong belief in Bitcoin? Feel free to share your comments and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.